Right. Hello, hello, hello. Have I pressed the... I think I pressed the wrong button there. Make sure we got the right screen sharing. There we go. That should be doing it. I think I did press it the first time. Ahoy there, traders, and welcome back. How are we all doing? Has everyone been having a good week? If you've not been having a good week, keep it to yourself. If you have been having a good week, pop it in the chat box. Hey, Peter. Hey, Al. Randall, thanks for your comments. Alan, Andrew. Jonathan, one or two new names. Chris, hello, Chris. Hello, Mike. New name. Maybe you've been here before. Just first time I've called your name out. Hello, Ron. Hello, Steve. Hello, Scott. No Vito this week. He's always at the bottom of the list. Personal. Right. So I've, rather than plan lots of slides and have a narrative for the week, I just thought we'd just get straight into it this week. And let's just find stocks to trade. That is what we're all here to do, rather than me talk about some of the philosophies of trading, which I do like to do. It does keep the things interesting, but the general agenda is we're going to spend the next 20-30 minutes at least, and up to the next 60 minutes just looking at the markets, and just looking at the markets this week. No, nothing else essentially. We'll look at, finding some stocks to trade, what's interesting, the market view, and just generally having a good time, a little bit of a party feel to it. It's the long holiday weekend. We've got the July 4th weekend. So, let's try and have a little bit of an upbeat, a little bit of excitement. Let's have it interactive. If you've got a question, if you've got a stock you want to look at, just throw it out there. Let's try and have a little bit of a fun session this week. If you're new, feel free to chip in. I'll take questions as and when I see them. They're on my other monitor, so I shouldn't miss them. But if I do overlook them, just type it again. I'm sure it'll come back up in the comments. If you are new, my name's Phil Newton. I've been hand-drawing charts since the early 90s, calling most of my trades out in real time since 2004, blah, 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 yada, yada, yada. The only thing that's really important is that I have coached thousands of students with my programs. I've personally mentored a lot of people, from retail traders through to hedge funds, banks, owners, institutions. I really like helping the little guy, the retail traders like you and me, because that's where I can make the most impact in the world with the things that I'm involved with. Most days you can find me in a coffee shop. I've just come back from that. That's why I was just a few minutes late. I enjoyed a nice sandwich, reading my book, just catching the morning sunshine. If you can't tell from the accent, I'm in the UK. So we've got some nice weather. So I am not a Wall Street guru. I'm just a regular guy, figured a few things out. And every week I like to try and give you my little flavor of being a swing trading mentor, just to guide you down the road of, the things that I found useful and found successful over the years. Again, I'm not reading from the script. The words don't match what I'm saying. But nonetheless, I figured things out quite early on. For my own trading. So I just want to be able to impart a little bit of guidance to help you along your journey at the very least. And you don't have to take my word for it. It works. All my students tend to tell me that they are doing great. And to be fair, Kyle, I just want to call out Kyle. I don't know if you're here, didn't see your name on the list. In our little insider community, literally just posted this not 5 minutes ago. He's closed OKA. We'll go and look at that later. 65% return on capital. And again, these are quite literally in the last news just in. So well done. Let me just quickly see if you're here, Kyle. If you're there, if not, you'll catch up on the recording. The point is, it's replicatable. What's the point of doing this? What's the point of me doing this? What's the point of you doing this if you can't replicate success? What I do, it gives me time freedom. It gives me financial freedom. And it allows me to do anything that I want to do when I want to do it. I appreciate that. I'm very fortunate to have figured it out. I'm just further along my journey than your journey. But in my particular case, it allows me time freedom. I'm not spending hours flicking through chart after chart after chart. At the moment, I'm enjoying my urban rambles. I go and visit all places around my local area. I've become a little bit of a local tourist. That's what I do with my time. This is from this week. I found some wonderful graffiti artwork. I don't know if it's your thing, but just this little random corner of a back alley with some, very nice artwork. Again, I find things interesting, so I just tend to wander wherever the wind blows me. And that's what the time freedom, the financial freedom gives me. So what does it give you? What do you want for your trading, for your life? That's the motivation. That's why we're doing this. So that we can enjoy the fruits of our labor, but without the expense of eating up all of our time. So with that said, let's go and find some stocks to trade. Let's go and create some time freedom and financial freedom for ourselves. Does that sound good? Everyone with me? Everyone going to join me? Pop a little yoo-hoo in the comment box. Great. Sorry, I've just pressed all the wrong buttons there. I'm stalling for time. Just bear with me a second. There we go. Awesome, Peter. Thank you, Zach. Right. I can't. Where's my... Just creating my little drawing widget. Awesome, Randall. Thank you very much. Bear with me a second. I'm pressing all the wrong buttons on the other monitor. There we go. That's what we were looking for. So let's take a look at the charts. Now, the first thing that I like to do, I usually do this on my mobile phone, is I look at the top left. I'm looking at the overnight futures. And typically look at the mini futures, do that on the left there. And all I'm looking at really is the percentages. Are we up or down in a big way overnight? Has Europe done anything interesting? Has the Far East done anything interesting? And if it's not, which it hasn't, as you can see there, then we probably don't need to stress over it. It's going to be another good day. Now, given that it's Friday, we've had... according to the news, 9 straight consecutive closed higher days. We've got new all-time highs. We've got a rally in an uptrend. Now, let me pause there. Has anyone ever heard the phrase, buy the rally in an uptrend? Has anyone ever heard of that? Buy the rally. Is it not buy the dip in an uptrend? Is it buy the dip in an uptrend, or is it buy the rally in an uptrend? Yeah, lots of no's. Awesome, Randall. So when we look at the S&P, let me just zoom in now that we've got the big picture. But this rally in an uptrend, it's not that we can't do anything with it. But when we've seen several straight days up, new all-time highs, not just new highs, but new all-time highs, it doesn't mean that it can't or it won't continue. Just like back here, early April, we saw something similar there. So if we're looking at the charts, we've got to look back at history and say, well, what happened last time? So I'm not saying that there's going to be a crash or a correction. I do think there will be, but note the word think is different from it actually happening. So I've just got to plan for the possibility. But if we just look at last time, well, it went sideways for a couple of weeks. Then it put in a little bit of a retracement. And we can call this a retracement in the context of the long-term trend. It's not a crash. It's not a correction. It's not an, oh my God, the Chicken Little, the sky is falling. It's in context with the trend. So that's what I'm expecting here. To, potentially see some sideways, potentially see a retracement. Will it be today? Probably not. Probably not. Why? It's Friday. We've had a great run. And again, if we just look back at the context, if I just zoom all the way out, we've got this lovely rising channel. And we're not really at the upper boundary of it. So we're not really at potential resistance. So there could be quite a bit to go. Now, will it move in a straight line? Probably not. It doesn't often move in straight lines. If we look back at the last several rallies, we normally see anywhere from 5 to 8 consecutive days where it just goes up and up and up and up. That seems to be pretty normal. It's only happened a few times in the last 12 months, but it does happen with a degree of regularity. So let me just pause there. Does everyone get that observation? It's just an observation. I'm not doing anything clever. There's nothing fancy. There's nothing creative. There's no Dow theory, GAN theory, Elliott wave theory involved. I didn't have to spend years studying some type of square of 9. I just made the observation. What happened last time? Some of the regulars will hear me say, it's like that game Spot the Difference. When you're a kid, we had these two, or I had these two pictures. You've got the completed picture, which is anything to the left of the chart. Anything to the left of the chart is a completed picture. That's not changing. So all we're trying to do is figure out with the partially completed picture on the right, what's going to happen next. So if we're looking at the charts, we've got to believe, truly believe, that history repeats itself. And we know it does. We've proven it time and time again. That's why we look for patterns. That's why we look for charts. That's why we look at all the widgets and the whiz bangs, whatever the tool of choice that you want to use is. That's why we're doing it, because at some level, we've got to believe that it works. Otherwise, why are we doing it? So I'm making a sensible observation based on history. We've got a very clear uptrend, and we've got a rally in an uptrend. So is now the time, coming back to my original question, has anyone ever heard buy the rally in an uptrend? It's not impossible to do, but after a 9-day rally, this is the time where all the retail traders, all the bag holders, all the people who watch the news and the talking heads and the media and all the other nonsense, that's when they get excited. This is the time that they get excited to go, oh, the market's moving. Maybe I should get involved. Maybe I should get involved. And that's where the downfall of the retail trader happens, the bag holder, if you like, for one to be a little bit hypercritical of the situation. But this is where you'll start, and pay attention to the world around you. If your coffee barrister, if the Uber driver, if the guy next door who's never spoken about stocks before suddenly starts talking about, I'm thinking about buying some stocks, that's not the best time to be thinking about doing it. Again, this is just real world examples of buying the rally in an uptrend. It's usually indicative of, I've missed this trip. I've not missed the entire opportunity. It's just this leg of the journey has been missed. So on the S&P, just be a little bit wary. If you are going to be a buyer today, just be a little bit wary that the market in terms of the S&P is a little bit overextended. It may pause, probably. Can't say for certain. We will never know for certain what will happen. We'll find out tomorrow, metaphorically speaking, what will happen yesterday. And so, market rally. So we're probably going to finish on a rally. So we may hit the ground running today. If you are going to be a buy, just keep things on a tight leash. Don't go crazy with looking for new opportunities. Now, it doesn't mean to say that there aren't any, because when we look at the Dow type indexes, which are industrial average, they're kind of again, a smaller number of blue chip stocks. We've got this sideways. So again, we've got that same overarching rally, this overarching uptrend, but we're not yet rallying in the same way that we just saw in the S&P. So there's still opportunities in the markets. We've just got to be a little bit sensible. I mean, this is a lovely range. I think we're going to see a breakout. I think we're going to see the markets in the context of the Dow start to see some movements. We've already started to see it turn off that retracement. It's just not doing it in the same way as the S&P 500, which are 500 blue chip stocks. Let's take a look at the NASDAQ. So again, we've just got this breakout. So here's that consolidation that we've been watching for the last several weeks. This is only just broken out here. And we were speculating on it last week, if you recall, that it was going to happen. And a week later, it has happened. So this is that new opportunity. So the NASDAQ's probably got better opportunities. Tech has probably got better opportunities compared to the S&P 500. So if I'm just trading the indexes, I'm thinking maybe I trade the NASDAQ, maybe I trade the Dow, because the S&P has kind of leading the charge. It's put in its move. So again, if I was just trading futures, if I was just trading the S&P, I'm just looking for where might be the best opportunities. I'm just at the moment trying to be a little bit selective with where I start. So again, if I'm just looking at the indexes, that's what I'm thinking. And then when we come to the Russell, we think, holy smokes, this has got the potential to put in a great movement. So the NASDAQ has broken out. The Russell is about to potentially break out. We've got this lovely time-based or sideways consolidation, lovely rally into the consolidation. It's basing for multiple months, and we're just tickling a breakout. breakouts. So if we see that, and it's looking good for the breakouts. You've got this higher low inside the range, got another higher low here. The Russell for me is looking like the best opportunity. So do we want to trade blue chips? Do we want to trade the top 30 industrials? Do we want to look at tech, or should we focus on mid caps? If you gun to the head time, folks, let's throw it out to the room. What do you think? If you can only choose one, what has got the best potential? Is it S&P 500, the blue chips? Is it the top 30 industrials? Is it tech? Or is it middle America? Is it the 2000 small caps? And you can only choose one. Which has got the most potential? Do we want to buy the breakouts, which is a valid strategy, or do we want to, at the other end of the spectrum is the S&P, do we want to buy the rally in an uptrend? Well, no one's ever bought the rally in an uptrend and survived to tell the tale. We've all done it at some point early on. Yeah. So now, I think everyone's on the same page here, but does this make sense? That this is, if we're just trying to be a little bit smart with what we do, because the market's moving. You're absolutely right, Steve. It's not too late for the NASDAQ either. So it really is a choice between the NASDAQ, which has just broken out, and the Russell, which is about to break out. Whereas the S&P, it's rallying in an uptrend. It's already broken out to new highs. So I don't really want to chase the move. Let's not worry about it. Now, the Dow it's yet to break out. So there is a little bit of possibility. It's only 30 stocks, so not really so worried about that. Tech, again, representation of tech. Tech is rallying. It has broken out. That's a great setup. And then the Russell is imminently, I think, about to break out. Technically, you could argue it's broken out of that kind of small range there. You got the higher lows. Again, I think that looks like a great explosive candidate. Yeah, absolutely. So a good observation, Peter. So what we could do is we could look for stocks that have a similar narrative to this. If we think that the Russell, the pattern, the picture, the blueprints, however you want to phrase it, with the best opportunity is the Russell, should we find opportunities that look like this pattern? So we don't have to, what's the phrase I'm looking for? So we don't have to try and chase a movement. We can just, or trade, Russell stocks. And again, to be fair, we've got 2,000 stocks in the index, but we can go and look for patterns and charts that might overlay into this narrative so that we can participate. And Peter's suggesting airlines. Yeah, we can go and look at airlines. So we look at UAL, which is, again, so when we start to look at individual stocks, first time looking at this in a while, it's not. So first thing I want to do is just zoom out, look at about 12 months. The thing that jumps off the chart at me is we've got this, it's almost a hybrid between the S&P, that rising channel on the S&P, plus the Russell consolidation in the last sort of 6 to 8 months. So for me, price is, no matter which way we look at it, it's in a range of some sort. And now that we've spotted that, I can see that we're a little bit above that $50 level. So if I was going to trade airlines, again, I just picked UAL as the first one that I could, the first ticker symbol I could recall. I'm buying at the range low. The potential is up to the range high. And we don't need to worry about a breakout. So it's not necessarily that this is a breakout stock similar to the Russell index, but it allowed us to focus our attention on maybe we don't worry about the big blue chip stocks because they're already in motion. Let's see if we can find something that maybe is about to start moving. So United Airlines looks good. Let's take a look at Delta, DAL. Unsurprisingly, we've got this similar type of pattern where we've got this rising channel consolidation in the same way as the Russell was highlighting, and we've got that range low. And what you'd expect to see is most of the airline stocks would be potentially developing the same type of pattern. One stock I am in, I'm already in this, just in the interest of disclosure. You can see where I'm in there on my yellow crosshairs. Is Boeing. This is one of my top 50 stocks. Tends to do well. We've got that same rising channel. You've got price at the low of that rising channel. I'm not worried about the moving averages because price is ranging. I don't need to focus on the moving averages so much. But if price is in a range, this rising channel, and we're at the low end of the range, then we've got to assume that price is probably going to carry on oscillating back and forth. So we've got to expect a move up to 280, which will take us up to the upper end of the range. And if the rest of the market is going to try and catch up, if you like, with the S&P, again, top 500, big blue chip stocks, if the rest of the market is going to put in a catch-up move, and that tends to be what we've seen recently, where, and when I say recently, the last sort of 6-8 months, one of the indexes leads the charge. At the moment, in the last 10 days, it's been the S&P. So the big blue chips leading the charge, and then rest of the indexes potentially will catch up. So we're looking for individual opportunities that have the potential to catch up with, in this case, the S&P. The rest of the market is how we phrased it. So we've got a good candidate on BA as again in the airline stocks, which is again one of the chat room suggestions. So what we can also think about is, well, let's just go through FANG stocks. Let's think about Apple. So Apple is about 12% of the NASDAQ. And if the NASDAQ is about to break out, or has broken out on the index, and this represents 12% or thereabouts of the index, and is yet to break out, and it hasn't really been involved in any of the movements, which has been a little bit frustrating, but it's at the upper edge of this consolidation here. So, if we do see a move up towards $140, that could really tip things over, especially on the index, especially on tech as a breakout, because we know tech's got an opportunity to put in that catch-up move, which is why I'm now going to Apple. Well, let's look at the biggest stock in the index on tech that I know, because it's one of those ones that everyone tends to look at. Is it moving? Well, no, it hasn't moved for 6, 8, 12 months. So we've got this opportunity where the index tech is breaking out, the market S&P is moving. There's an opportunity for catch-up moves. Tech has been out of favor for a couple of months. Now it's coming back in favor. We're seeing that sector rotation, and Apple's starting to put in a very interesting and respectable move. So just thinking logically, just trying to extrapolate, where might the opportunity be? Again, I've got plenty of trades on, but I'm just looking for, okay, where may the opportunity be? If you've got a smaller account or you're still learning your trade as a swing trader, you can be a little bit discretionary in your approach. There's nothing wrong with it. I'm trying to move away from it in my own trading, as most of my insiders know. But there's nothing wrong with that discretionary analysis. Just understand it's a discretionary analysis. What I'm trying to do is replicate the decision-making process. So all we're doing is using the current market viewpoint, which is, where might be the best place to look? Where might be the first place to look? We've identified tech, we've identified small and mid caps. And even though we've done that, we started off by looking at the indexes and say, okay, where's the opportunity? It means that we don't have to look at the blue chips. You don't have to look at the Dow type stocks, the industrials. We can go and zoom into, well, let's focus our attention on tech and mid caps and just start off with the ones that we know. Just want to pause there. It's not the analysis that's the important part in this decision-making. The decision-making process is, where shall I focus my attention? Does that make sense? So even if you want to apply a discretionary approach and go hunting for opportunities, we're going to focus our attention, because then now it means that we're not looking at every stock every day all the time. We're just focusing our attention on, well, let's just stick to the names that we know, that are in tech, the names that we know that are in the kind of the mid caps. Maybe it's ones that have led movements, that led the market or led the sector in the past. And we can go and focus our attention on those first before we need to worry about scans and looking for opportunities. Again, I'm just skipping through some of these FANG type stocks. Netflix has been great, been kind to us. We've spoken about that. Nvidia's been absolutely amazing. Again, do we want to get involved with the Nvidia right now? Probably not. I'm already in, but I'm waiting for a retracement. I've cashed out a part of my position on this. But maybe we want to, hang fire. PayPal looks good opportunity. If we're thinking about tech, we've got this lovely consolidation here. Oops, Daisy, where's my thing? Got this lovely consolidation here. We've got this breakout. We've got this pullback. Has anyone seen this before? Has anyone seen that pattern where we've got this little bit of a consolidation here? We've got this little breakout here. So there is a potential in tech on PayPal. Whoops, we got, oh, let me try that again. Pressing all the wrong buttons here, just bear with me. Let's try this again. There we go. So we've got this consolidation. We've got this rally breakout, and we've identified that tech is breaking out. PayPal is a tech company. But have we seen this pattern before? Yeah, I wouldn't worry about that. I wouldn't worry about the double top. A cup and handle, yeah. So it could be you've got this. We could interpret that as a cup and handle. Normally, you'd expect the handle parts ahead of the breakout. So normally, you see the cup, and there's a little bit of a handle. So what we have here is we've already got the rally. So it's more of a continuation. So it's not quite a cup and handle, Randall, but a good attempt. Let's think about spot the difference. Remember, we've got a partial picture on the right here. Partial picture on the right. Can we see a similar pattern on the left? A completed picture. Can everyone see that? Can everyone see that? So we found very quickly a similar area of the chart over here. Let's call that number A. And let's call the one on the right number B on the right. Can everyone see that they're similar shape? You've got this consolidation. You've got this kind of rally, a little pause, call it a breakout if we want. It's the same type of pattern. So what we get to do is we get to say, well, what happened next? What happened next is in the green box. That's our potential. So we can extrapolate that, well, maybe that happens again over here. Let me pause there, folks. Does that make sense? Did we do anything complicated? Did we just say, can I see a part of the chart that has unfolded in a similar way without even scrolling the chart, without yeah, exactly, Steve. History repeats itself. So without scrolling, without meandering, without dipping around with scale and zooming in, as long as you just look at 8 to 12 months on the chart, you'll probably find something. If you don't see something, it's okay. But when you start to look at the whole chart and not just on the most immediate candle on the right-hand side of the chart and ignore everything else, if you look at the whole 8 to 12 months minimum, you'll start to spot patterns, and they're not necessarily out of a textbook. They're not necessarily out of a textbook. I wouldn't worry about the name of patterns. I wouldn't worry about the name of opportunities. I wouldn't worry about it. I would just very simply look for history to repeat itself. And if you go back further and further and further, and the more that you start to do this, the more that you'll train your eye to looking for patterns. And that's really all we're doing. Again, don't necessarily worry about the name of it. But for me, that consolidation, and I half recall talking about this at the time and finding another opportunities. Again, I'm just drawing the rallies, the retracements. You got that, that's our potential there. So if we're thinking about history repeating itself, there's our consolidation, there's our rally retracement, there's what I got in. We've got another rally retracement, there's the breakout entry setup. So, if we see price move higher now, we've got the potential. So what happened last time? The last time price broke out, it went from 220 to 300. So there's about an $80 potential. I could work it out as a percentage and, multiply it out and blah, blah, blah. Let's just say we've got an $80 potential. So 280 plus $80 is going to be our potential. So we're looking at a move up to $360 as a target, 360. All I've done without using Dow 3, Gann 3, Elliott 3, without using Fibonacci, without, doing something that requires me to spend hours looking at the charts. And this sort of analysis, it takes longer to explain than to actually do. All I've done is said, well, what happened last time? Well, that could probably happen again this time. And as Steve just said there, all we're looking for is for history to repeat itself. Let me pause there again, folks. Does this resonate? Does this simplify the decision-making process? Does it help you find and evaluate opportunities for yourself? Thank you, Lloyd. Thank you for your comments. Does it help you kind of get to grips a little? Yeah. We chip away a little bit every week, don't we, Peter? You know, we fill in the blanks. We do a little bit. We do a little bit. We're going to look at mechanical ways. So this is a discretionary way to approach the markets. Where's the opportunity? What are the indexes doing? What are the markets doing? Let's focus our attention on 5 or 6 stocks in those areas, in those sectors, in those. And if you're not sure about individual stocks, go to the ETFs. You know, this is a list of ETFs. You know, there's only 10 or 15 there. You can go and look at the sectors and see what the sectors are doing and see where there's opportunities. So you don't have to do the individual stock thing. Let's think about mechanical scan. Let's think about mechanics. Where should we go? Let's do this. Okay, cool. So this list of stocks here, it's about 50 stocks. Actually, it's a little bit more. It's about 80. It's about 80 stocks there. 80 of my favorite stocks. Let's think about mechanical scan. So we started off with a more discretionary approach, which is what most people do. They'll start off with a discretionary viewpoint. Now, what I like to do these days is I like to be as mechanical and as clinical as possible. We will still find the discretionary trades. For example, PayPal. I found that with a mechanical scan. I didn't find it through discretion. I wasn't flicking through chart after chart after chart. So how do we find opportunities? The first thing that we always want to do, and for anyone who's been following me for any length of time will know that we talk about blueprints. What are we looking for? So the first thing that you need to do as a trader, and again, appreciate there's a mix of some people who have been with me for a while and some people who are brand new, and this is your kind of first day, listening to me. So the first thing that we always want to do is we want to think about, what am I looking for? What is my ideal setup? So you heard me mention it before. Most people here are, and most people are, trend traders or some form of trend trader. And if we're trading the trend, we want to buy the dip. And I flippantly and jokingly said, we're not buying rallies in an uptrend. It can be done. It's not what I like to do most of the time. There's a way of doing it, but often it ends in tears for most people. So what we want to do is we want to buy the dip. In terms of Warren Buffett's-esque investing, we would be buying stocks at a discount so that we can profit from their appreciation in value. If I had a shop on the high street, I would be buying at wholesale prices and would be selling at retail prices. The difference is my profits. Every business works the same way. We want to buy good stocks at a fair price so that we can profit. And everyone gets that. But for some reason, when we step into the stock market world, when we start looking at the charts, for some reason, everyone thinks that something different is done. So buy the dip. What does it mean? It's not just something that the kids say. It's not like diamond hands to the moon, baby, and all the rest of it. There is a thing. It is a legitimate strategy. But what we need to do is define what buy the dip is, what it means. And that's what we're going to look through right now. So we're going to remind ourselves of what that is. Buy the dip. To be able to buy the dip, we need to define the trend. So from a mechanical viewpoint, we want to firstly say, okay, over here, numero 1, let's say that the average prices need to be crossed over. So the average prices, this is the 200 period moving average, the 50 period moving average, and the 20 period moving average. So I'm going to define the trend as the 50 period moving average has crossed and is above the 200 period moving average. But I'm not going to jump in feet first. I then also need to see that that trend, that average price, has been sustained for at least 40 days. So step number 2, to help me avoid the false alerts, the false starts, is the trends from the average prices needs to have been crossed for 40 days. Cool. 3, I actually want to see price having actually moved. So not only has the average price got to be crossed, it has to be crossed for a certain period of time. I also want to see price moving. Doesn't really matter how much, as long as it is moving. Now I can do all of that over here on the left. So the columns here, the first one that I'm just marking off, I can see that the average prices are crossed. This next one with all the numbers that I'm just highlighting now is telling me that the number of days that the average price has been crossed. And then this column here is a built-in tool. It tells me what happened in the last 60 days. So I can see all of that, all of those 3 things at a glance. This column here that I'm highlighting is the average price is bullish. The second column is that they've been in a trend for 40 days or however many days. And then this third column is that it is moving. Great. That's what I'm going to define as a trend. 3 conditions. It's really simple. 3 conditions. So then the 4th element is the dip. So these yellow boxes are what I'm going to be looking for. That's what we want to zero in on, the dip. So a dip, I can define the dip or a retracement in 2 ways. I can say it's at least 10% in 10 days, or it's below the 20-period moving average or below the 50-period moving average. So price needs to have sold off in that trend and is back below the 50-period moving average, or it's down 10% in 10 days. So back below the 20, below the 50. In this case, it was down 19% in that time period. We're not buying rallies. We're waiting for retracement. So we're back here. It's below the 20, down to the 50. You can see that it doesn't always work out. Didn't work out there. But 1, 2, 3, 4, 5, 6. This last one here, this is what we've been looking at the last few weeks. Comes back to the, in this case, the 200-period moving average, reacts back above, goes back above the 50. And again, we've got these opportunities. So this is what we're looking for. This is the buy, for my point of view, the buy the dip blueprints. We're looking for price to be at least in that first box, but it could be in any of these areas of the chart. And that's what we're going to quantify as the dip. Whew, it takes longer to explain than to actually do. So what I can do next is I can easily scan down. I can sort all the stocks that are in the various trending states. I don't know if you saw that, but all I did was click and sort the columns like I'm sorting a spreadsheet. Then I'm going to do the same thing here. There's only one that's not in. Can everyone see that one? There's one that's got a brand new bullish trend. It's been in a trending state. I don't know if you can see the number. It says 1616. Let's go and look at it so you can see. So we've got average prices crossed over. It's been in a trending state for 60, and I'm looking for 40, remember? And the number, it's up 15% in the last 60. So now we're looking at this chart. It doesn't look great, but now we are looking at it. It looks like it's range bound. So it's not the best looking chart for the moment. Actually, now we're looking at this, looks a lot like our Russell idea earlier. So we can filter those types of stocks out because I'm not looking for them on the watch list on the left. So that's all I'm doing here. So next one is, we can see that first one there. It's got a new cross. It's been crossed over for 42 days. So all of these stocks have an average price crossed over for at least 40 days. Then I can sort, they need to be up. They need to be positive for a certain amount for the last 60 days. So if I just say, well, it needs to be up, let's just say 10% in the last 90 days, which is not an exceptional trend, not a huge amount, but it just means, can everyone see that all these stocks, they're either up 9% or down 20% in the last 90 days. So especially the stocks that are down, that's telling me if they're down in the last 90 days or the last 60 days rather, I don't need to look at them because they're not trending. Let's just go and look at CE and X, this bottom one here, row number 180. So it's down, what is it? Down 17% in the last 60 days. So it's not a raging trend. It's not a strong trend. I don't need to worry about it just yet. So that's what we're filtering out. We're filtering out the weak stocks, the weak trends. And it's not, I think I've got to add it. It's not a perfect solution because now I'm looking at it, it looks like it's going up over a 12-month period, but it's not moving in the last 60 days. Certainly it's down. So we want to find stocks that are up in the last 60 to 90 days. But then what we also want to do is we want to find, if I look at this column here, I want to find stocks that are, if I separate these, I'm only focused on these stocks here now because these have average price crossed over, the 40 days minimum in trend, and they're up in the last 60 days. So if I then sort on this column, which is, was the stock up or down in the last 10 days? So we can see now that those stocks here are either down 10% or down small in the last 10 days. And all of them are below that. The red box there is saying, where is price in relation to the 20, the 50, or the 200? So it's red box is saying it's below the 20-period moving average. It's above the 50 and above the 200. So what we're expecting to see, so can everyone see that? So I'm focusing my attention on the left. So now we've taken those 80 to 100 stocks down to 1, 2, 3, 4, 5, 6, 2, 4, 6, 7 stocks. 7 stocks. So 80 becomes 7. It takes longer to explain than to do. But what I'm expecting to see here, the average prices crossed up is what we want. So we've got this bullish trend. That's what we're expecting to see. I'm expecting to see price moving up. And then I'm also expecting to see price retracing, but not a huge retracement, just below the 20-period moving average. But now they're the only stocks that I need to look at today and probably this week. Let me pause there. We've not yet looked at one of these charts, but does everyone know what we're looking for? Let me go back to Twitter. TWTR. So I'm looking for, So I'm looking for a stock that's in one of these areas. That's the blueprint. I'm looking for it to be retracing in the context of an uptrend. So that's what we're expecting to see. So let's go and see if so now it takes longer to explain than to do, but now I've only got 7 stocks to look at. Let's go and look at them. 10. We've had a great trade on this recently. This was a breakout candidate. We've been following this from earlier on in the year. We took a range reversal, breakouts, and again, we've got a nice trade on, but now it's below the 20-period moving average. Maybe there's another opportunity to buy the dip for the next leg of the movements. I think just because I'm already in this, I don't need to stress about it. I'd like to see it closer to the 50-period moving average, more of a personal preference. But if it doesn't retrace deeply enough, that's okay. I'll buy as it goes back above about $21 because that's the strategy. It's buy the dip. So this is would it be fair to say that if we go back to Twitter, TWTR, it looks a lot like Twitter did in that area of the chart. Again, remember, this is our completed picture. That's what it looks like, completed. It's actually, thinking about it, it's a little, would it be fair to say that it looks steeper? Although it's a new trend and the new trend area is there on Twitter, it'd be fair to say that it actually looks a little bit more like that because it's steeper. Would that be a fair evaluation? So let's just label that as number 2. Would it be fair to say that 10, the stock that we just looked at, looks more like this second area on our blueprints? Lots of yeses. Great. So let's think about that then. So what did Twitter do when it did a very steep upward movement? It came back below the 20, it came down to the 50, and it pretty much meandered for about 3 months. So it kind of meandered for 3 months. So what I've got now is, again, some of my insiders was like, this is an O and. I've recognized that, well, on one of my blueprints, Twitter did this last time. So I can take the way that Twitter behaved and overlay it on 10, the stock that we've just found, and say, well, because there was a speedy move here, let me just highlight this, and we're talking about this area of the chart now. Because there was a speedy movement here, just like there was on 10, I can go and look at what happened afterwards on Twitter to try and figure out what's going to happen next time on 10. Because we've already established that history repeats itself. The fact that it's not happening on the same stock is irrelevant. Stock price movement, stock behavior is a representation of crowd psychology. So it's individuals, it's humans' behavior of buying and selling that's creating these moves. So we can easily transfer the study from Twitter over to 10. Okay, so what happened last time? Last time it meandered for about 3 months. Not necessarily saying there's going to be a gap down, but it's going to move sideways. It's going to rest. Another way of thinking about this is because we've seen such a fast upward movement, it wouldn't surprise us to say that, well, we're probably going to see price rest. Just like a sprinter, if it runs a world record 100 meters, there's a good chance that you're going to take a break before you run your next 100-meter sprint because you need to recover, you need to rest. The way, again, just another metaphor is that tide goes in, tide goes out. When you've seen a big crashing wave hit the rocks, maybe there's going to be a little bit of calmness after before the next wave hits the rocks. The tide's got to go in and out, in and out. And the stock market's often compared with all these metaphors for a reason, because it very regularly happens. So let's go back to 10. So what I'm now thinking is, again, because I'm already in the trade, I don't need to worry about getting involved. I've already got exposure. So I'm just thinking about what's the best way to get involved. So now my viewpoint of, well, I'd like to see it back to the 50-period moving average. Well, I'm thinking that that might be a good thing, either a downward retracement or more than likely a time retracement in that price is going to move sideways. So I'm going to place a discretionary override just based on things that I've seen. That discretionary override, that's my and that's the way I view the markets. And that, again, it's not essential to do it, but what you'll find is when you start looking at charts over a period of time and you start looking at these blueprints, the idealized, what's my perfect setup, you'll start to recognize the ebbs and flows and the shapes of these charts all the time. And this is what buy the dip. So I've got a buy the dip opportunity. 10 looks great, but I think on this occasion, I'm not going to not place the trade. I'm just delaying my decision to place the trade because of that speed of movement. I think that there's going to be a rest first, and that rest, that retracement could last between 1 and 3 months. We're already 1 month into this retracement. It could be another 2 months while it consolidates, it rests before the next leg of the movement. So if and when the 50-period moving average catches up to where price is, so it could be a depth of retracement or enough time goes by for that condition to be met, then I'm going to be really interested. So I'm aware of it. I'll keep an eye on it, but I'm not going to probably take any action for at least 1 to 3 months. What's the small graph scale on Twitter? TWTR. What's the small graph scale? That's just like I've drawn that on manually. It's just you can put those on yourself. So Steve has just asked me what these were. Yeah, you can put boxes on. It's just to highlight an open trade. You might recall I posted an image in the community, so it just makes it more visual. Right. Okay. So let's whiz through the other two. So this is Toyota. Average price crossed over, in trend for 40 days. Visually, it's going up. Now that we're looking at the charts, it's below the 20-period moving average. Kind of got that same speed of movement there again. We've had the consolidation breakout like we were looking at on the Russell. So now, just from today's looking at how many charts we looked at, 6 or 7. We've not looked at many charts, but just from the charts we've looked at today, we can see that, hey, there's something that we saw quite literally 5 charts ago. That looks like the Russell. We were looking for a breakout. The breakout's happened on this. We've got the retracement. It looks kind of similar to Twitter, kind of similar to 10. So maybe we just wait for price to come down to the 50-period moving average. Now we've got some experience. Now we're applying the decision that we've made moments ago. We're applying that same decision with consistency. Cool. WW, Weight Watchers. So price is back below the 20 period. It's back to the 50 period moving average. I've already got some analysis on this. I've looked at this previously. We can see that we've got a clear multiple touch point rising channel. So although the average prices are highlighting the opportunity for me, I've already been looking at this. I've got a rising channel. I'm going to override my decision to say price, the visual inspection of our process is in a consolidation. It's a rising channel. I'm going to treat it like a consolidation. I've got to be bearish inside the consolidation down to the range low or wait for the breakouts for a move higher. WMB, look at this one. Perfect. So WMB, average price has crossed over. It's been in a trend for at least 40 days. Visually, we can see it's trending awesome. It's retraced back to the 50 period moving average. I don't think I need to do anything discretionary here. I'm going to be bullish above $27. Mechanical decision. That might even be a today trade. TTM, Tata Motors. Average price crossed over in trend. We've got that same consolidation that we were just looking at on the Russell. A little bit of now this coming back. Who was it that was asking me? It was it Randall? This looks more like a cup and handle there. Now usually they're referred to. Let me just draw that. This looks more like the cup and handle shape. There's that rounding bottom. There's that kind of cup types. You got this rounding base, you got this cup here. They usually happen at the low of moves. They're usually a launching point, but the fact that we've got this consolidation into it, so you've got this consolidation, it's a high basing pattern, so this looks better. But can you see that the handle on the right side, it's usually a little bit below the, if I just draw the high there, it's usually a little bit low. That's normally how it's the shape of it. I don't often worry about the name of patterns. The way I think about this, it's a pullback before the breakout being above the consolidation high. So you got this correction, a little bit of a tiny pullback before a price actually breaks out. So let me just draw this just for you. So you got the consolidation. So price would rally before the breakout, and after the breakout would be obviously if that pullback was above the boundary high, which is a more classic breakout pattern. So that looks quite interesting. So TTM, Tata Motors, looks great. I like it. Price goes back above, say $23 and about 20 cents, back above the 20 period moving average. That looks awesome for me. So we've got 2 trades today so far. WCC, I'm already in this one, so I don't need to worry about it. It flagged up a few days ago for me. So we've got the average price crossed over. You've got there's that pattern again. Now that you've got them in your head, Randall, there's that kind of consolidation, a little bit of a pullback before the breakouts, and then it breaks out. So it's not necessarily a cup or a rounding pattern. It's just, call it a consolidation. Don't worry about the name of it. It is consolidating, end of story. A little bit of a pullback before the breakout, and then it breaks out. You'll see that happen more than a breakout, then a pullback entry setup. I spent 12 years just trading this type of consolidation breakout. I know them very, very well. It's a little bit beyond our session today, but that's normally how I would trade these opportunities. Anyway, we've got price down to the 50 period moving average. We've got a nice entry there, multiple entry points. So just waiting for that next leg of the movement, and should profit quite nicely from it. Again, I'm already in this, don't need to worry about an entry. Last one, IGT. Average price crossed over in trend for 40 days. Visually, we can see consolidation. There's that consolidation there, rally, retracement. This is your more classic breakout pullback setup. And again, entry above about $25 should give me a nice clear entry into the next leg of the move. So 3 trades for today. We've got IGT, we've got to be fair, IGT, we've got WCC, I've got 4 actually, TTM, Tata Motors, what was the other one? And TM, Toyota Motors. No, that was the, my apologies. There we go. WMB. It was the last 2, wasn't it? So WMB, TTM, and IGT. They're all looking great. In fact, no, 4. My apologies. 4. WMB, TTM, WCC, and IGT. I'll post them in our public community, so you don't have to write them down. Do, do, do. Da, da. Do, do. Right, okay, so workshops. Da, da. So if you're in our group, this is Slack. You can go to my website, antivestor.com/Slack. That'll take you here. There'll be some other good stuff from our workshop today. There we go. So you just copy and paste them, take a look at them in your own time. I'll also post the replay up when it's done. So I think that's it. So we've got 4 stocks very nicely. So WMB, TTM, WCC, I'm already in that one, and IGT. So 3 new ones for me, 4 in total for everyone else. We've got 4 nice trades. Nice to get a few live ones for a change. So we've got a very simple process to buy the dip. The first part of it, it comes down to, like, we need to define what you're doing as a trader so that you can go and look for it. Because if you don't know what you're looking for, you can't scan for it. So all the scans in the world are not going to help you become a better trader if you don't know what you're looking for. It doesn't matter how fancy the software, it doesn't matter how expensive it is or inexpensive for that matter. If you don't know what you're looking for, it becomes impossible to scan for it. Again, does that make sense? So Lloyd, just picking up on your comments there. So it's, yeah, absolutely. Keeping it simple, keeping it mechanical. We've done it 2 ways today. We did that discretionary evaluation. Where should I be looking? Still speeds things up. But for me personally, I've got a universe of stocks that I like to look at. Yeah, I've got a universe of stocks that I like to look at. And I really just want to zero in on the best opportunities every day, just so that I'm not zombie trading. I'm not flicking through chart after chart after chart, because so many people and students that I speak to before I end up working with them, the biggest challenge is, like, what should I be looking at? What stock should I trade? What setup should I be looking at? And it's not that that's a bad question. It's the wrong question. What are you looking for? How do you want to trade first? What's your style as a trader is sometimes how it's phrased. So you've got to figure out first and foremost, before you decide to get another course, hire a mentor, before you even place a trade, you need to figure out, okay, how do you want to trade? Do you want to trade the trend? Do you want to buy the dip? Other things that you want to think about is, do you want to spend all day, every day at the computer looking at charts and trading opportunities? If you don't, either practically you physically can't, or you don't want to do it, then the example I give is that there's no point learning how to day trade if you don't know, if you don't have time or the inclination to day trade, because the trade-off is you've got to spend time at the computer looking through chart after chart or analyzing the data. And, like, although I've got day trading strategy and day trading program, like, it's still, the trade-off is time. If I'm going to trade that strategy, I'm locked in. I'm committed to between 30 and 90 minutes looking at the chart. Now, it's still not a lot, but that's as efficient as I can make day trading, because all I'm trading is gaps at the open. I haven't traded them for a while. I spent 8 months last year doing them. If anything, I just reminded myself as to why I don't day trade anymore. But I spent 12 years doing it, and it's not a healthy prospect. So again, coming back to it, a large part of what I like to do is it's that time freedom element. I want to minimize my time at the computer and be very efficient with how I approach the markets. And although we focused a little bit more on the discretionary decisions today, there is a process to this. We start off with, and we saw it in the second half of what we did, there's a mechanical scan. It's longer, or it takes longer to explain it than to actually do it. But all I'm doing is I've defined what buy the dip means to me. And I've defined it to the point where I can go click, click, and pick. And we found 7 stocks. Before we'd even looked at a chart, we found 7 stocks to look at. We then did that visual confirmation, and we narrowed that down to 4 stocks. Is this a stock that I need to trade today? Yes or no? Does it meet one of my 6 money-making blueprints? Yes or no? If yes, place the trade. Now, of those 4, I was already in one. So there's actually only 3 new trades that I need to possibly do something today because we've got that visual confirmation. Just a little bit beyond today's session is the profitable trade framework. I'm going to look for my entry, my exits, my stops and my targets. I'm going to look for all of that before the trade goes on. I'm going to know what I'm going to do, when I'm going to do it, how I'm going to do it before it goes. That goes into a spreadsheet so that I'm never wondering where my entry is, where my stop loss is, where my targets are, how I'm going to manage it. I know all of that. And again, it takes moments to do because we've got a checklist for each of these things. It takes moments to do. And that means that I'm not a zombie trader. I'm not doing the stock market equivalent of where's Wally and now what shall I do and what next. All of these things should be known before we place the trade. So if you want some personal help with this so that you can sort out your production line trading, which is what I refer to my process as, because that's what I'm trying to do. I'm trying to create this production line for all the decisions. And we saw that process earlier. When we've recognized a pattern, we systematize it. And we saw the same pattern over and over and over again on the several stocks that we looked at, and we systematized the decision-making process. So if you want some help with this, I do offer a mentorship program. My time freedom allows me to do things that I enjoy, and this is one of the things that I enjoy doing. So if you want to learn this process, you can learn it in the next 7 days. You'll focus in on the best stocks, the best patterns to trade. We've got 6 money-making blueprints. They're focused on data and my real results and my student results. You can replicate the process. We'll look at the money management aspects, the TTE, the time out, the target out, the exit out management system, which is the real secret to any success. It's not the money you make, it's the money you keep. All those cliches. It'll take you about 90 days, or you should start to see results in the next 90 days. And you'll never be reading through boring company reports. You won't be zombie trading. You won't be stressing. You won't be wondering what's going to happen. You won't be stressing over crashes. That's essentially what I help you do. And you've hopefully seen a little bit of a sample of that today. If you would like to learn a little bit more about it, just go to AntiVestor.com, fill out your details. You'll be taken to a 14-minute video, and it will just explain a little bit more about what I do. If it's right for you, then let me know. We can have a chat and about what to do next. And again, I refer to what I do as production line trading. And if you'd like some help with that, very simply just send me a message. So that's my unabashed promotion, my invitation to work with me. I am looking for a couple more students to work with at the moment on a one-on-one basis. So if you've got a little bit of time and you want to really accelerate your own trading and your own learning curve, and you can learn in the smartest possible way, again, by all means, just send me a message and we can take it from there. Right, where are we? Right. I think that's it. We're a little bit over time, 4 minutes over. Thank you very much for your time and attention. I see there's a few questions. Stephen, I see you've got a comment there. I'll send you, there we go. So during class today, found it very informative. Yeah, the recordings, if you want to, there's a question about recordings. If you go to my website, it's antivestor.com, and then it's just /Slack. This is the tool that I use. And there's a section for workshop replays. We've got them all there. They essentially go to YouTube, so you can find them on YouTube. We've got past recordings, got some bonus stuff on there as well. Just to kind of introduce you to kind of my way of viewing the markets. So hopefully that helps you, Stephen. So you'll be able to catch up on some of the lectures. This will be recorded, or it is being recorded, so it'll be posted either later today or over the weekend. So if you missed the earlier session, you can catch up on what we're looking at. Stephen, thank you very much for your comments. Learn something new every time. Thank you. Every time we just chip away at it. I often find myself saying to most students at some point is that it's not complex what we do. It truly isn't complex. There is a lot of moving parts to what we do. If you think back to the last time, or maybe the first time that you learned something, maybe driving I always use driving as an example. When you first learned how to drive a car, It was difficult, but it wasn't complex. It was only difficult because there's a lot of new stuff to learn. There's a little bit of moving parts. There's several moving parts, but it wasn't complex. And if you think about where you are now with driving a car, you probably don't think about it. You probably just do it on autopilot. You can shift the gears, you can change, you can indicate, you can move lanes. You're not bumping into anyone. You're not crashing the car every 5 minutes. It took time to get there. It's not complex what we do, but there is a learning curve to it. And training is no different. So I've never tried to blow wind in anyone's sail. There is a learning curve to this, but it's worth learning. It really is, because when you get past the learning phase, you get into the doing phase. And the doing in this case means that you're going to start making money from swing trading stocks. And it's from my point of view, it's wonderful to see all my students that are making money. Just to come back to a few of our insiders here. Again, we've got Kyle looking at OKE. One of the stocks there, Spaces on the move. This is from our insider community. There we go. We were just talking about these. Paul's talking about WCC and AMC, LB there. Again, some of our insiders. So, everyone finds their own stocks. Everyone's making a good success of this system. And we've got 6 money-making blueprints. We go through one every week. There's 6 money-making blueprints that we use. That help you to find, filter, and sort opportunities every single week, every single day, and you should be able to do this in 20 to 30 minutes every day. You don't have to be flicking through chart after chart. As we say as I keep saying, I've said it several times today, it takes longer to explain than to actually do, which it should be. But anyway, I'm rambling. Let's take a look at OKE. That was what one of the students just did. So this is, again, a stock that I'm in. Bonus stock for everyone. OKE, we've got this lovely rising trend, potentially breaking to new highs. Looking good. Again, I'm already in this. I don't need to take I've got a couple of trades on this. You can see where my entries are based on the yellow crosshairs. But that's where I'm in on this stock. So bonus trade is OKE. And you've got 4 others. They'll be in the Slack group. So if you'd like to join it, feel free to. If you've got any questions, comments, observations, by all means, send me a message. Most people send me a direct message. So if I missed your question today, there's nothing personal. I just missed it. But if you'd like a follow-up or a more personal answer to anything that is being asked today, just go into the Slack group, send me a message. I'm more than happy and open to help you along your journey. Anyway, thank you for your time. Thank you for your attention. Oh, doing the Columbo question, Steve. Low. What about lows? LOW. It's not in my universe of stocks, Steve, is the first thing. It doesn't mean that it's not worth trading. But now that you've got the flow of what we were doing there, the thing that jumps out at me is we've got this consolidation, you've got this breakouts, you've got this flag type pattern. Again, the names don't matter. I'm just using them to describe the situation. This looks like a bullish setup to me. I would imagine that if we go above $200, the first thing that we'll see is a retest of the high, which would be 220. And if we look at the last move, it went from 150 to 210. So we've got a $60 target. I can project that up from the low here and just add $60 to 180. Well, it's about 185. And that'll give you a nice projection of what to expect, Steve. You saw the speed of that. Again, although I approach this from a discretionary point of view, the decision-making process is the same that we do and the one that we use, and the one that I'm teaching you at the moment, Steve. I'm teaching you the mechanical version at the moment, Steve. But if you want to layer on those and decisions, when you recognize the phase of the charts, that you recognize certain patterns, certain structures to the markets, you saw how quick it is to analyze. It should be a systematic approach to evaluating the stocks, evaluating the charts. And guess what? If we didn't see the trends or we didn't see the range, well, it's going back above the 50-period moving average. There's our trigger bar, first target to retest the highs without looking at any of the other discretionary stuff. We've got our mechanical trigger. I can look back at the last moves and see what it did. Well, we've already done that. It's about 60 there. It's, what have we got? It's about 50 there. So the next move is probably going to be between $50 and $60 just because we've looked at the last move and we can project the next move based on what the last move did. So we get to the same conclusion with the mechanical process over the discretionary process. There's no right or wrong solution. Like, obviously I know both. It comes with a little bit of time, a little bit of experience, you know, but if you're at the new end of the spectrum, you'll get to the same answer with the mechanical decision, the mechanical process, and the discretionary stuff, the and. The way I like to treat it these days is it really just confirms the strategy process in the first place. I see these other things as well. Well, that's fine. All it's really doing is confirming the mechanical automated strategy anyway. So, no big deal. So it just gives me a little bit of extra confidence maybe to place the trade or maybe increase position size to take advantage of the situation because you've got some extra things that you recognize. Is it? Oh, there we go. Oh, yeah, so it is. So it is. There we go. Right there. It is in my universe. You're absolutely right, Steve. Eagle-eyed Steve. Well done. So that's it. We've got 2 bonus stocks. Lowe's look good. Lowe's to me looks like a today trade. So that looks good. So we've got a bonus, 2 bonus stocks. We've got we've got Lowe's as some bonus opportunities. Guys, girls, ladies, gentlemen, we've got a full house. I've got a relatively flexible rest of day. What I wanted to do has been done. If you need to step away, feel free to. But I'm here for you guys and girls. So if you've got any questions, comments, observations, if you want to fire stocks, if you want to run through them, if you want a second pair of eyes like Steve was just pointing out with some of his choices, I'm happy to stay around for as long as you need. But if not, if there's no further questions, I'm happy to call it a session right now. And I'll just leave it with a thank you again for your time, for your attention. I always appreciate that, time is the most precious thing that anyone can give you. So I'm really thankful that you've decided to take an hour out of your day and spend it with me. So it's not unnoticed. I want to thank you again for, deciding to spend some time with me. So hopefully it's been time well spent. I feel great for it. Hopefully you do too. Oh, Randall, thank you for your kind words, Randall. Again, I think I'm all caught up with the questions, unless someone has got a Columbo question. Just one more thing. We'll call it a session. It is being recorded, folks. It'll be ready probably later today. But if you've got any questions or comments, if you think about something after we finished our session, just shoot it over in Slack for me, and I'll get to it straight away. Maybe I'll record you a personal answer on a short video for you. But until next time, again, Andrew, thanks for your time and your attention. Everyone else, thank you for your time, for your attention. And if you tune in next week, don't be a lurker. I see there's a lot of names in the group. We've got a lovely community growing. Don't be a lurker. Say hello at the very least. It makes it more interesting session. Have a great weekend, everyone, and I'll speak to you at same time, same place next Friday. Until then, bye for now. Mm-hmm.